Hello, everybody, and welcome to episode number 112 of Confessions of a Market Maker. I'm your co-host, Ray, aka All Day Ray, aka the Backdoor Man. And I'm joined here by my superlative co-host, former market maker of 20 years and current day retail trader, the man who brought House Street its infamy, the lover of Fluffy Whip, JJ. How's it
Hey,
going?
what's up? How you doing, brother? How you doing?
I'm doing real good, man. Missed you on the last podcast, JJ. I think the first one out of all these we've done that you were not there. You were in
Exactly.
Turkey. You were in
I
Turkey. How
took
was the vacation?
it was amazing. I haven't taken vacation since 1995. So it's a beautiful thing this year. My girlfriend took me on two vacations and it's now I understand this vacation thing. It's pretty cool. I could get used to it.
Excellent. Glad you had a great time, man. And our guest today
Hmm.
is a Scottish man, a founder, a CIO of Eclectica Asset Management, a global macro hedge fund that ran from '02 to 2017. The high watermark events were the early and successful identification of the gold bull market in '03 and the housing debacle in '08, both of which delivered annual returns of between 30 and 50%. 30 and 50%. The St. Barts luxury hotelier and acid capitalist. I'm talking about Hugh Hendry. Hugh, how's it going, man?
Heavens, yeah, it's going to be fun. I'm liking the vibe already. God, I must say, am I a hotelier? I mean, I'm just a scuzzy property developer or whatever. I'm a former CIO. My hedge fund closed. The clients got fed up after 15 years. Like, oh, and
Uh-huh.
then like, oh my God, the people who cannot distinguish between assets under management, like hedge funds are like a bank.
Mm-hmm.
AUS, your deposits.
Hmm.
If deposits leave, that does not equate with losing money. That's just the clients coming in, coming out, but whatever.
Exactly.
Yep. Hugh, man, we thought you'd be perfect for, this podcast, the vibe, man. And just a pleasure to have you on. We had this scheduled for last week, but I guess we were talking a little bit beforehand. What a fire broke out there. You're in St. Bart's, correct?
Yeah, heavens, I mean, they're unrelated, but we had a 6.4 tremor out north
Wow.
in the
Oh wow.
sea. You get about 1,000 tremors a year in the Caribbean. I mean, this is a rich island. It's not the Caribbean. I mean, it's in the Caribbean, but it's not really the
Mm-hmm.
Caribbean. And the houses are all, secured for earthquake as much as you can be, earthquake and hurricane. I mean, they're designed solid, but at the same time, we lost two of the three generators, electrical generators. And so we had disruption to about 80% of the island's energy supply, which meant, folk never had AC. And
Mm.
it is damn hot. It's not just hot, it's hot and humid. This is the low season. It's quite a nice time. It's a quiet season on the island.
Yeah, it's gotta be brutal because I'm in Florida, Hugh, and it is borderline unbearably hot right now. I can only imagine what it's like there right now. And so opening this up, Hugh, Eclectica was the name of the hedge fund, and just for the listeners, eclectic, right? So definition: deriving ideas, styles, and taste from a broad and diverse range of sources. I guess like a good thing here for people to get to know you. What are some ideas, styles, and tastes that you draw upon?
Yeah, I'm so eclectica by name, eclectica by nature. Um, the the principal juice of my fund is, I mean, do I look like a finance guy? Can you believe they gave me $1.5 billion? But why did they give it to me? I mean, partly I got a lot of money from like pension funds in commodity countries, and they were just minting it. Like
Yeah.
even after the crash, of course, places like Canada never had the housing retreat as we saw in the
Exactly.
US, but you had the immediate reaction, the wrong reaction to QE in March 2009. And so commodity prices went on that insane rip from '09 into 2011, profound capital misallocation by the sector, which they came to regret. And I think they were just like so swimming in water. They're like, why don't we give money to that idiot? You'll be kind of entertaining, you know. So, but if there was any formality in their decision making, they allocated to me because I had almost no correlation to certainly any other manager, and I had very, very low correlation to just about every other principal risk asset. And so I was an entertaining diversifier, and my job was just to make money at a different time, not to lose money, you know, to make money at moments arguably of stress in the system. Yeah. And so famously or otherwise, I managed to come through in a way, you know, I had a kind of 30% plus return. So I delivered on, and there were other periods, but yeah, I was like, I don't know, my compound growth rate over 15 years was somewhere between 7 and 8%. Which is to say, I offered kind of somewhat convex returns when the proverbial hit the fan. And then for the majority of time, it was all about just not losing money or a lot of money when everyone was making a lot of money. So it was like an insurance policy that paid you, let's say, 7% a year. Normally you have to pay for it. I 7 carry, and then I kind of insured you on bad beta years.
Mm-hmm. Yeah, you know.
Oh, sorry. I'm just curious about you know, why they gave you the money too. But you do have a very traditional background. I mean, you're ex-Baillie Gifford. I've always been fascinated with that place ever since they ran the box on Tesla when it ran to 1,000. You know, Baillie Gifford was the warehouse for that paper.
Yeah. Yeah, they were. And there are many things I could tell you about Baillie Gifford. But they were quintessentially growth investors.
What was it like working there? Can you tell us about?
Forgive me, because I lost you on the volume there.
Oh, can you hear me now?
I can hear you now, yeah. So you're asking me about Baillie Gifford and how they were.
What was it like to start out there and to train there?
Hell. Absolute hell.
Really?
Yeah, I mean, it was, hell can have many facets. Sometimes hell can be glorious. There are some hellish places I go late at night in some kind of big metropolitan cities and have a lot of fun. But hell can also be taxing. And so the two sides of that, I gained a wonderful discipline. You know, I was working with super smart people who were anally retentive, and they were always kind of grumpy and angry. And this is a long time ago. This is like heavens. I don't know, a long time ago.
90s.
90s, yeah. And so like I remember I had to I guess it was on a computer I was typing, but I would be writing once a month an economic report, and then in the other weeks I'd be writing a stock analysis. So there was a nice combination of macro and micro. The reports had to be printed, and then I was responsible for delivering it by hand in paper.
Oh yeah,
to every person, and then I had to make formal presentations. And I tell you, if there was a syntax error, God forgive you. You know, they were unsparing. But they were quintessential growth investors. They sought to control risk, I think naively, but they sought to control risk through superior stock selection. The argument that, you know, businesses with strong moats, you know, the whole Warren Buffett thing, would be less subject to the capriciousness that can befall weaker franchises. And that's true to an extent, but of course it doesn't really capture when those businesses are overvalued and where the expected return becomes really kind of, you know, not so attractive. And then even the best businesses are subject to a reversal. You know, the impermanence of life. Things do change. You know? And when they changed, I remember, you know, they had, and you know, the noble thing was they were very concentrated investors. You know, a global equity portfolio would have no more than 40 stocks, 40 positions. Wow. You know, punch. But that meant they ended up having between 6 and 10% of the large companies. And when they went wrong, they prevaricated, procrastinated for the longest time, and would
Okay.
sell out like at a really bad price. But hey, their growth mantra. When I worked for them, they had $3 billion, and I think at the height of the Tesla thing, they were almost $400 billion.
Exactly.
I know asset prices have gone up, but they went up more. So well done them.
Good stuff. Sorry, I interrupted, Ray. I've got so
No.
many questions. Go ahead. Go ahead.
Yeah, no, that was gonna be along the lines of where I was gonna take this anyway, because Hugh, we were talking about eccentricity, right? And did you hide some of that of yourself, like when you first started working? Like, I'm not sure. I never worked in the in the industry, so I'm not sure. You played more of a fit in role, or were you still some of yourself? Maybe a mixture of both.
Um, Good question. It's funny. I just got this new outdoor cinema installed down here in St. Barts, and it's dope. It is gigantic, and it's connected to Sonos. I mean, it is insane. So I've been watching movies. I've been watching the back catalog, and 2 nights ago I was watching Snatch with an
Oh,
American,
great movie. Sorry.
Guy Ritchie, and you have Brad Pitt, and a list of the ensemble is incredible. But Brad Pitt playing a pikey, and like my friends like heard that term. Pikey, for those who don't understand, is a very condescending term for Irish gypsies and other nationalities, but particularly Irish. And so you have the Irish gypsies talking about the dags and the ponies. If you get subtitles, the dogs and the horses. And then they are coming up against the London kind of underworld, the nefarious world of gangsters, and they all speak Cockney rhyme, and it's impossible to watch without subtitles. And I say that because I was a kind of Mary. Is it Mary Poppins? What's the movie where they hire the kind of hey Diamond Geezer or whatever, the girl that has the impenetrable London kind of vernacular, and they try and turn her My Fair Lady.
My Fair Lady, yeah.
They try and teach her the grace and refinement of the upper class, and that's what I found myself. I found myself with partners who would wear the suits, the tailored suits of their dead fathers, and let me tell you, their progeny were taller than their fathers, and these guys would have like big gaps between the end of the trousers and where the heel began, so to speak. And I was hired as a diversity candidate because, remember, again, they were managing $3 billion, but they were on a push into North America, and they were kind of struggling a little bit. And so they phoned a consultant. Consultant had no idea, and so made up the story like, "Hey, listen, every year you take 4 graduates from Oxford or Cambridge. These are the top 2 Ivy League universities. We feel you need to bring in some kind of local kids." And that was me.
Nice.
And I used to speak. I'm now affected, but in kids from Glasgow, where I was born, would use the word definitely a lot, but it would be pronounced with an extra syllable, and it'd be definitely. And this caused profound angst and some kind of tittering. And so all of that was knocked out of me. But why did I get that job? I got that job through serendipity, through passion. Passion is something which illuminates even dark paths. And then, like I say, I received a wonderfully rigorous education. But there was something about my cadence, and to this day, I can't explain it, but I always had a sense of either positive or negative foreboding. I saw things before others, but they hadn't transitioned my skill set. They hadn't enabled me to monetize it, because analysis was very much, again, at the level of the franchise level. They would never look at charts. Yeah. We'll go on and talk about charts, because I left Baillie Gifford after 8 really quite miserable years. unsuccessful years, despairing years.
Mm.
I went to London, and after a year or so, I ended up in 1999 with a position with a prominent hedge fund. I didn't know what a hedge fund was, and working with a very flawed, disgraceful character, actually, but a brilliant mind. And he was using charts, and actually the charts enabled me to monetize the voices in my head. I like to speak as a paranoid schizophrenic. I hear voices regarding the future. I spend other people's risk capital, and I become very paranoid that I'm going to lose money. I mean, that's kind of how I would generalize the role of a risk taker. And then that all worked at the hedge fund, but as I say, at Baillie Gifford, whilst I could see change, and I'd get agitated as the events would get closer and closer, and everyone didn't care, then I was labeled a troublemaker. So I went from a troublemaker. I stayed a troublemaker, but I started making money.
Now, when you switch, now, am I allowed to say where you work? Because it's very timely. And I'm living in England right now, so I've been following his story. Now, you worked for Crispin Odey with Odey Asset Management, and what was that like working for him? Because what we read in the Financial Times, what we read in the Wall Street Journal, I know it's different having been in the business, for the way people write about somebody. What was that experience like working with him?
So, given the circumstances, we are talking about a disgraced financier who the allegation, and I can't really speak to the allegation on the show, but with candor, the allegation is that he was a molester. He was offensive to younger ladies. He was a sexual predator. And if that's found true, then they've closed his business. There's been a revolt against him. And if it's found true, then he will continue to pay the penalty. All I can say on this show is that he was attracted to me as being a troublemaker in terms of my intellectual curiosity. That I speak my mind, and he was very intellectually generous. He wanted someone to take him on. Again, he was a bully. He was a nasty person, and he caused me great fascination because he would never take ownership of errors. Right?
Really?
And this is a business. If you're 51% right, you're going to do really, really, really well.
Yeah.
But can you imagine not taking responsibility for the other 49%? And it was always the trader. It was always the poor sod on the other side of the telephone, and the anger was grotesque. And yet there he was, profoundly successful. And I spent the longest time in therapy saying to people, do you have to be a complete ass to make money in financial markets? Is there that kind of, how do you separate the finalists at the men or the ladies 100 meters sprint final? The margin of difference between winner and loser is impossibly tight.
Sure.
And genetically, they're all from a very, very tiny, gene pool, and it's the same gene pool, and they all train with the same regime. And yet one person is. And is it that when you're in the starting block, you just go, I'm a badass mother, and I'm just going to, I don't know. But for me, I rejected it. For me, if I have any wisdom to share, I would encourage people that you are the architect of your successes, but you own your losses. It's on no one else. And if you can accept that, you'll be wiser and you'll be more robust. And I think for that reason, I enjoyed the great honor of running a hedge fund for 15 years, which is considerable. The returns that we see for hedge funds have a survivorship bias. It's like restaurants, like really good restaurants make a lot of money, but the average restaurant fails within 6 months of opening. Hedge funds are like that. So if you will, I mean, you could say it another way. You could say I'm like that. You spilt red wine on the white shag carpet last night, and scrub as you may, you cannot get rid of the Hendry red stain on your white carpet.
Absolutely. So Hugh, I'm just curious to like the start of the hedge fund. How did that come about? So how did you transition from working to where you're at, the former hedge fund we were just talking about, to your own?
Yeah. So again, if you go back to the caricature of the monster now, he would take vacations like everyone, and someone had to manage his hedge fund, and believe me, that was not a position people were volunteering to take on, because he would, he's in London, he would vacation in December in the Caribbean, and so he'd be, actually in the winter you'd be 6 hours behind. He would be 6 hours behind. So you'd be sitting kind of around about lunchtime, and he's going to call.
Yep.
And you're going to give him the P&L, and just run daily. Is it up? Is it down? And sometimes it's a standard deviation event.
Mm-hmm.
And it's going to grill you. And I saw good folk reduced to to tears by that treatment. But I was like, bring it on. No, bring it on. Bring it on. I'll do it. And the rule was, if I was sitting there with risk position, and I found myself going, oh, I feel like I should do something, buy or sell. Yeah. I do something. I do a third. Yeah, and it's my rule it's the asset capitalist rule of a third. Yeah, if in doubt, do a third. Okay, and my point was, if I sold it and it was wrong, you'd be like, buy it back, no big deal. Yeah, if I sold it and I was right, you'd be like, thank God, like we're in motion now, and so it's easier to accelerate out of the position. The hardest thing, or the worst thing, is just to sit there going, and we had license, we traded all the time, boom, 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 boom. So if in doubt, I was trading, and I could deal with it.
Nice. So now to your hedge fund, Eclectica. When I was doing research for this, Hugh, I found this quote interesting. Your hedge fund, one of the quotes was describing that you could, to a centipede. The comparison was to a centipede, that you could cut an arm or a leg off and it's still going to carry on. So could you just maybe describe to us what exactly that was, what that quote's referring to?
Well, it's quite, it's a nice bridge from what I was saying. The thing that kills you is to procrastinate, like to get frozen, and it's very understandable. And so I was very much against, there was a time when large institutions were demanding that there was a true life story that became a movie where you had the free climber, and he slips or whatever, and his arm gets lodged in a rock crevice.
Oh yeah.
And no one knows he's there, and he's able to deduce that his arm is just permanently lodged there, and he's gonna die. That the only chance of survival is to cut the section of his arm off, and put a bandage, but put something tight and stop the blood. And who amongst us would do that? Because we've only got two arms. You'd spend a lot of time going, oh, I don't know. Exactly. And of course, the genius of that story is the guy did it. And it's, it's a shocking story, because who amongst us could do that? And so the centipede has 100 legs. And if a centipede loses a leg, if it loses 5, it's going to keep marching on. Give me another day. Investing is blessed. It's wonderful. Every day of curiosity, learning things. Give me another day. If I have to lose a leg, boom, I'm going to do it. So that's where that comes from. And also, I was typically, I want to say, kind of frontier investing. The hedge fund that I launched towards the end, the fourth quarter of 2002, our first calendar year gains were like 50%, and that was capturing gold. And I was very heavily positioned into. There was this term back then, old economy stocks. Smelting, everything, metal bashing, and what's not in the service sector. And I could see the presence of China beginning to be the marginal determinant of commodity prices. And I wanted to buy stocks in those sectors, but their businesses had been dreadful for 25 years. And so they were beaten up. They'd had bear markets, and they had investor disdain, and they'd been neglected, but they weren't trading a lot. And so I'd buy lots of. I'd go in. I'd own 25 copper stocks, and each day I'd be trading in and out and blah blah blah. So I had a lot of position because I was typically early in positions. And I forgive me, but to my mind, I always said to my clients that my superpower was I was capable. I could sing sweetly. I could give you the sweetest pole dance you can imagine. I could be your private dancer. I could have your mind juices blowing on the concepts of what was going to happen. But you could see me the following day, and I would reject everything I'd said. I wouldn't reject it through dishonesty or whatever, but I wouldn't have the position. But you just told me. I'm like, you don't have it. I'm like, no, the trend, kind of changed a little bit. I don't have to own it all the time. I'm like, so.
Well, having that like flexibility, that mental flexibility could probably be a strength, right, Hugh? I would say, because people who getting locked into a position or a viewpoint can be very troubling, right?
Yeah, no, indeed. It can be a strength, it can be a weakness, and you don't want your head spinning all the time. I mean, there is a point where you have to be committed. I mean, I think if we were transforming into a conversation about the present state of macro and like where you'd be assimilating risk positions, we're getting closer and closer to a point where you don't trade it more. Like you kind of try and develop an asymmetric position. And it's asymmetric in the sense that it'll have a fixed loss, and you size it according to the loss that will not kill you, but will provide and facilitate a convex, which is to say a kind of an exponential return should you prove correct. So I mean, there are times when you can't have the spinning top, but by and large, again, another one of my rules is it's just wonderful. It's so exciting when you've seen the future, and you want to put it on immediately. And I call that the conceit and the arrogance of a well-formed argument. You're the architect. You've just sat there and you've deduced something, and you're certain it's going to happen, and no one else gets it. And you're like, boom, I'm buying the stock, and that you're too early. Right. So it's like, wow. And your friends, your buddies, the people that respect you, you share the story, and they're like, I can't flaw that. That's a great idea. Do you mind if I join you? But at that point, it's like, stop and call a different trend, i.e. look at the chart. The number of times that I have seen people position themselves with their initial position in a stock or an asset class, currency, whatever, and it's trending down. Why would you do that? Like, keep it simple. Buy things going up, sell things going down, right? So you've got to conceive of the future. You've got to have the intellect to form a narrative. I mean, for me, I was conceiving of contentious narrative that I thought could go on and become an accepted belief system. I mean, I'm a preacher, man, but it was also inventory management. It was like, okay, great idea. I'm going to keep it over here. And when that stock starts to confirm this idea, then boom, I've got risk position.
Yeah.
Nice.
Very well. Yeah, no, I love that. It's having the idea, but sticking to like the technicals of trading and abiding by that. That's awesome. Hugh, would you still say, well, I guess I'll start off with this. Like, what maybe just give us a rough ballpark of maybe like a time frame that you trade and invest on.
Oh, I'm global macro.
Mm-hmm.
You know that saying, the slow to turn of a super tanker. I mean,
Mm.
it's agonizingly slow to turn. I mean, the U.S. economy just now, the labor market is agonizingly slow to turn. I mean, everything else is turning quite rapidly. The Fed, for their sins, are posting their hopes and expectations on the thing that changes last. It's kind of too late, but anyway. But no, I needed, let's say, 2 years. 2 years. 2 years.
2 years.
Would
Okay.
be I call that my landing strip. So if we bring that together into today's parlance, my contentious narrative is the inflation thing is nonsense. The money printing is nonsense. There was an exceptional set of global circumstances. Prices went up, but they can't remain elevated because, in actual fact, we're not printing money, and so they're going to fall rapidly. And I can see the emergence of a deflationary recession emerging in parts of Europe and certainly in China. And so that gives me an appetite to owning US risk-free treasuries. I know risk-free kind of seems a preposterous term. So then think about the things I've been telling you. I'm like, damn, I thought I was smart there. I thought I was onto something because I look at the chart and the chart ain't going up, and I only buy things going up. I'm like, oh,
Yeah.
And so do I cheat, or do I kind of like in another piece you may have read about me, they called me the plasticine macro trader. I got to be fluid and change shape and take it on. And so I buy a call option, and I don't like just every option. Right? It's called bad extrinsic. Like people like Ken Griffith at Citadel. Every option that you buy is overpriced. So if you're just buying calls or buying puts, you're just paying the casino. Ken, the richest guy because he's got the biggest casino in the world, right? And people just blindly buy the bad extrinsic. So I'm a little bit guilty of that. I buy on the TLT, and the TLT is an exchange traded fund trading 17-year plus maturities and treasuries. Has a lot of liquidity in the options, and you can go out to January 25. So again, to the point of time frame and landing strip, I began to open these positions earlier this year. And I was attracted to the thing. I can't tell you when the US economy starts to really feel it. I can't tell you when the next financial institution buckles, but I can tell you it's within 2 years. I can tell you that before the 17th of January, 2025, life will have taken a dramatically different course, I believe, and it won't be a course for the better. So that comes through. And then with the bad extrinsic, the Fed's still just looking at the lagging indicator, and so I sell a bit of 103 calls, and so I cheapen, and I sell like 30. I sell like on average 45 days forwards. I'm selling 30 and 60-day calls at the out of the money, and it cheapens up the 100s that I'm buying, and so it's been a pretty shitty doggy year for fixed incomes, just being volatile. It's been, I was going to say flat. It's been volatile and modestly down, but I think I'm about like 10% off, on that strategy. So landing strips is how I do it. And again, if I was to give you one other flourish, the 30-odd% I made in 2008 came from a trade which was originated in April, May of 2007. And I had bought a 2-year forward bet on the twos versus tens, that the yield curve inversion. I was expecting you get a bear steepener and it would move. I think I was $1 million per basis point of change in the spread.
Wow.
And I sat in misery. There was a bit of complexity in my structure. I didn't own spot TOOS10s. I owned the expectation of where spot would be 2 years hence, and I did it again on the basis that I could carry a large asymmetric trade that didn't have a negative theta. So like every day that passed didn't cost me money. But the complexity made it, it deferred my payout. I didn't get paid until literally the day of the Lehman bankruptcy announcement. And it's
wow.
a torturous year because, again, I keep saying to people, don't tell me what's going to happen. Tell me what hallucinogenic, acidic acid prices are going to do before then. Because, in my experience, they're going to do a lot of crazy stuff. And if you cast your mind back to that period, the ECB was raising interest rates in the summer of 08. I mean, they're just classic idiots. The oil price was $140. The Fed was slashing rates, but actually the capital markets were wrong. They were saying, hey, listen, buddy, for every cut you take in rates, you're going to be adding them they're going to be adding them in 2 years' time. And that market kind of prejudice was obliterated when we had the bankruptcy of Lehman's, and that's when I made the money.
Mm-hmm.
Nice.
Excellent.
Interesting.
So Hugh, me and JJ, we're short time frame type traders. I'm not like well versed in macro, nor does it really even really much apply to my trading style, but nonetheless, it's still fascinating. Hence, why we're having you on here. I believe I seen you say, and you could correct me if I'm wrong, but that maybe the way of viewing the macroeconomics has changed over the years. Was that true? Did I read that correctly?
Yep.
Yeah. And I'm real curious from your perspective, what you think's changed.
Oh, what's changed? Heavens, this is where I turn into Ray Dalio and start boring you to death. If you're listening, I love you. But I mentioned my fortunes took a turn for the better around 2002 with the opening of my hedge fund, and I told you I made 50% in the first calendar year, and I made it because I was acutely aware of the significance of China. It'd been accepted it'd been accepted as a trading partner with the rest of the world, essentially by the US. And that was 25 years ago, and every macro rule no longer works. Macro hedge funds have been kind of a bit doggy, really. All of the presets, all of the wisdoms, Charles Kinderberger, Manias, Panics, and Crises, which was the kind of the Bible of how you'd kind of try and train your mind to catch opportunities in macro. Mm-hmm. From that date onwards, never. After the Asian sovereign crisis in the late 1990s with the profound devaluation in the Thai baht et al. Mm-hmm. That was classic Kinderberger, but thereafter Kinderberger has just been a dud. I don't mean that facetiously. I mean, Kinderberger is an amazing book. Why? So there's a profound change in the nature of globalization. To keep it short, China in the last 40, 50 years has experienced what the US produced in the 19th century, the industrialization of a backward community into a very thrusting, modern, very important economy. The US did it in the orthodox manner, where there's so many investment opportunities, opening up a chemical plant, opening a railroad, telegraph lines, canals, you name it. The investment pool is far greater than the source of domestic savings in the economy. Mm-hmm. And so you solve that by running a trade deficit, and you have the rest of the world investing their surplus savings and giving you the wherewithal to have this fantastic and high productivity investment super cycle. The Chinese rejected that model, and I think they rejected it owing to the near proximity of seeing the Thai baht et al. Like implode, because the repercussions of that were that you had kleptocracies, you had the long-standing political leaders in that region, and they were all booted out. You know, the West had lost money. The Western institutions like the IMF came in and they imposed, if you will, regime change. And the Chinese Communist Party like, we don't really do regime change. We're forever kind of thing. And so they decided to do an industrialization policy which would be funded from domestic savings. And so China runs, as we know, it's nothing cultural. It's very much an economic orthodoxy by the Communist Party. They impose the need for high savings on their household sector, which then acts as a subsidy to their manufacturing sector, and you know they run profound, huge, persistent trade surpluses, especially with America. And in economics, it's meant to be mean reverting. So that's great. They did smart things. A lot of their investments were hugely productive up until about 2008. And classically within economics, their currency should have appreciated to, if you will, to reflect and honor that comparative advantage, but also to reward Chinese citizens. They would become richer vis-a-vis the rest of the world. And therefore, they would have the wherewithal to buy more and more goods and services produced by the rest of the world. And so the huge trade surplus would narrow as the currency goes up, and we would be back in equilibrium. That hasn't happened. Instead, the Chinese, they don't essentially buy goods and services, they buy US financial assets.
Interesting.
And so I believe QE is an imaginary, hyped thing by idiots at the Federal Reserve, that the true source of money printing, which is responsible for the elevation in global asset prices, has come from this particular quirk and change in globalization. And until we change that, we're just going to have more and more asset price inflation. But at the same time, it acts as and this is where it's controversial just now, it acts as a barrier for higher wages. So presently, we've had this inflation spurt, and people are, their real incomes have been devastated because they haven't had the increase. Well, that goes to my script. You can't have China, where every day they're resetting labor prices lower. Their currency is beginning to slide and devalue again. It's devalued modestly over the last 35 years. Maybe it's accelerating. It's kind of impossible to go into your manufacturing company in America and go, I need a 10% rate hike, wage hike, like, we're moving to China, so
exactly.
So you have asset price inflation and you have disinflation in the wages of real folk. And so you've got a discrepancy, like houses and stocks and education and healthcare become more and more prohibitively expensive for the real folk. And I hope and pray that changes. I think there are means to changing it. You could replicate what President Kennedy did in '64. I think he had the equal rate. Was it the Rate Equalization Act? Forgive me, I should know this better. But he put a withholding tax on sovereigns coming in and buying U.S. financial assets to discourage them. He was worried about they were under the gold standard regime, and he was worried that they could pull gold as they redeemed those financial assets. Yeah. That's effectively closing the capital account. That's making it very hard. So if you say to the Chinese, hey, listen, you know what, like, you're kind of smart, right? And we're going to copy you. So you close your capital account, we're closing our capital account, finger to the man kind of thing. The US won't do that. So an alternative is kind of embodied in the CARES Act, the Great Inflation Reduction Act, but the US is now pivoting to copying the subsidization of onshore manufacturing and trying to bring jobs and well-paid jobs back into the US and to try and encourage private sector investment, albeit subsidized. It has to be subsidized just now because the Chinese are subsidizing. That's a step in the right direction, but it requires more.
Interesting.
Yeah,
interesting. Thanks. Yeah, thanks for that, Hugh.
Go ahead.
Sorry,
Jeff. Just quick question. The last week when we were going to have you on, I had just read that the UK plans to overturn a ban on naked short selling in, of sovereign bonds. Now, you were quite active in that market. Can you maybe comment on that a little bit?
Well, you're saying that presently you can't short gilts, because for sure you can.
Well, yeah, they were saying that they were proposing to scrap the EU restrictions on short selling of sovereign bonds. Arguing that it's easier for investors such as hedge funds to bet against bonds and it'll boost liquidity.
Well,
That was
sure.
out in the, yeah.
I'm unsure as to the authenticity of that, but
Okay.
The short selling is just asinine, and to that point, you destabilize the internal structure of the market when there isn't the presence of shorts, because you are removing a constituency, the only constituency that actually has the willingness and the wherewithal to purchase assets when
Exactly.
they plunge, because they're profit seeking, they wish to realize their profits.
Yeah.
When you take out that fundamental source of liquidity in a falling market, then you just magnify the scale of the drop.
Exactly. There's no short bid. Yeah.
Indeed, but it was devastating to like good, honest, speculation in 2008, because like the U.S. bank sector made an all-time high. Like, just Lehman's went bankrupt. Why? Because they banned short selling.
Yeah.
I was modestly tweeting overnight about is it KRE, the regional US bank index, and it's fallen 2/3 from its all-time high. That, to my mind, is the fat lady. There are going to be more financial accidents in that sector. Their business is severely challenged by the regulator, the Federal Reserve. It seems to be trying to put them out of business, but everyone knows it, and they're going to trade higher. And then it's like maybe another regional bank does go bankrupt, and I think it's likely. And then does the Fed come in and ban short selling? So we could get to the point where the KRE actually trades back at its all-time high. I mean, that's the footprint from 2008. So you've been right. You've had a series of major banks go bankrupt, and yet the damn thing trades at an all-time high. Risk assets are hallucinogenic in their transition from bull markets into bear markets. They never see it. They're like, hey, boom, I'm dead.
Interesting. Thank you.
Yeah, Hugh, for the listeners, other than yourself, who would you tell people, or who are some people that you yourself personally maybe look to or follow or read for global macro picture?
Well, I say, do I say it jokingly? I don't know, but I typically say, hey, there's only 5 people in the world that actually understand money. Yeah, which is to say that the central banks don't understand money. I had Professor Steve Hanke, a wonderful, graceful gent from University of John Hopkins in Baltimore. He's the Don. He's been there for 56 years. And he's got this rule that 95% of what you read in the financial press is just bunkum. And I was reading the Financial Times this morning, and I kind of copy and paste. There was a quote from the CIO, who will remain nameless, of an institution which is responsible for $1.2 trillion, and that's 1,200 billion US dollars. And he says the Bank of England has had a checkered history in sending comforting signals to investors. You see, there's no mention of money in that statement. It's like a love-heart relationship. Oh, yeah, I'm gonna cross with you just now. Like, you're proving so cranky. I like it when you tell me that good things. I don't like it when you tell me that inflation is above target. It's people. This moron does not understand money, and he's the CIO of an institution with $1.2 trillion. Again, in context, the U.S. economy is $25 trillion. This moron is responsible for 1/25 of the size of the U.S. economy, and he doesn't understand money. And he's not alone. Do you think Jay Powell understands money? Do you get appointed Fed chairman because you understand money? He's a lawyer. Right? What are lawyers good at? they're good at kind of being soothing and telling you bad news and charging you for it. They do
Exactly.
communication, right? So literally, I did one time. I sat with I was like, okay, I'm going to count the people. 1, 2. I got to 3, 3.5. And I was like, I couldn't get to 5. So I don't know if there are 5. Now, in terms of educating ourselves, there are Twitter is an amazing resource. I know we bought it at the wrong price, but it's an amazing resource. Unfortunately, a lot of the young folk are not like attracted to it. I mean, I've got a 19-year-old daughter and a 21-year-old son, or soon to be. They would never be on Twitter. They're on the gram, they're on Snap, but they're not on Twitter. And the joy of Twitter is the public utility, that there are great minds. And so for me now, before I read the insanity of the financial press, I have Twitter lists, so I don't have to scroll through that, just noise that they send you. I've got a list of about 10 people that, and I know for certain that overnight they will have written something and they will have impacted some wisdom. And I sit there and I ponder, and I follow quite a few kind of like jazzy kind of economic thinkers. They post a chart and very graphical, and so that helps me. If I gave you 2 names, my thesis with regard to globalization and its impact on asset prices and wages, that would very much come under the auspices of Professor Michael Pettis. He's a former investment banker, don't hold that against him. But he grew up with the kind of Brady bond, with the blow up. Citigroup was bankrupt in 2019. Citigroup was bankrupt in 1982 with Brazil imploding. And so he cut his teeth on emerging market crises, and he now teaches economics at Peking University. And he's prominent. I'd recommend people follow him on Twitter. And then I have to say, I call him Jesus, but I love Jeff Snyder, the Eurodollar University. If I was running a hedge fund today and some kid came seeking a job, if they could not quote verbatim from Jeff's extensive catalog, which is all about trying to understand this profound, dark private sector matrix which creates dollars. More dollars are created offshore than created through bank lending and onshore in the United States. If you can't quote chapter and verse from Jeff's show, then you ain't hanging with me. So there's, if you will, two prominent names.
Excellent. Yeah, that's obviously, Hugh, that's how we found you, was on Twitter. And like I was saying, like, we're short-term traders, so I really don't pay too much attention to the global stuff, unless just for curiosity of myself. I like it, but then I came across you, and I'm like, who is this guy? Like, just totally different, off the wall, eccentric style, and it was refreshing, man. It was nice, and I think I guess where I'm going with this is like the curiosity, like the outside of the box thinking. I tend to like lean more into that. Like, even myself, like, I think that's probably a strength, I think, in trading. And even a bunch of the people we've had on the show, we've had like real contrarian type traders. Have you seen that, through your time working? Is it kind of more of the people who are against the grain, as opposed to, the herd, the herd mentality that's gonna, makes more of a successful trader? Or am I maybe a little off base?
I mean, the principal message of asset capitalism, I should be wearing my hat. I can't find it. The assetcap.com, folks, very, very expensive, preposterous hats that say asset capitalism. But people stop you and they'll say, wow. Anyway, cheaper than LVMH. The principal message of asset capitalism is that you don't have to be a douchebag.
Yeah.
Like, I'm getting divorced just now, so I'm kind of reacquainting myself with the ladies, and like, inevitably they're going to say, "Hey, what'd you do?" Like, and they typically say to me, like, like, "So you're in the music business?" And I'm like, let's run with it. The last thing I want to damn say is I'm a former hedge fund manager. Oh my God, I go be like, I'm out of here, honey. I'm like, yeah, I'm sorry. So, and so I investing in speculation, Again, the suits call it the dismal science of procrastinating the future. Screw them and their linear thinking. Like, it's an art form. I mean, this is a preposterous endeavor. We're trying to anticipate the future, and we don't have a time machine, and we're just making it up.
Yeah,
exactly.
Think of it this way. I was watching another movie last night. Oh God, it was so dark last night. I was watching Cicero.
Oh,
yeah.
great movie.
Yeah. Well, there's two. There
Mhm.
are two great movies, but the first one is, I mean, and again, the cinema photography is unbelievable. I think it's Jacques Villeneuve or something, who sounds like a dead Formula One car racer.
Exactly.
It is the deepest, darkest hole. I mean, it's just so black. Anyway, so I watched a lot of movies, but you know, my buddy was saying to me, why is it that so much of art captures the future? So, you know, to be a little bit silly, but not so silly, think of a lot of the Star Trek things, or more significantly, you think of A Space Odyssey 2000. Right?
Exactly.
I mean, they've got iPads. I mean, they're FaceTiming, they're Zooming.
Exactly.
And sometimes I think, like, I hear that President Biden is going to come out in September and actually confirm that they have evidence of, you know, alien intelligence in a vessel and all that. I mean, who knows? But, you know.
Well, Arthur C. Clarke did come up with the idea for satellites.
Yeah. Oh, and so much.
You know, and sorry, back to movies really quick. I heard that one of your favorite characters is Bricktop from
Snatch.
Yes, which is one of my favorite characters, and a lot of my clients were like Bricktop. This is the reason why I don't show my face. So,
well, I definitely I certainly wear spectacles in a manner which salutes the insanity of Bricktop. But yeah, no. So my point is, you know, to try and see round corners. It kind of helps just not to be another like suit guy.
Yeah.
You know, flexibility of mind. I mean, everything we've discussed, from being the caterpillar, the plasticine man, it's all about evolution, changing. It's all about avoiding just being fearful. I'm not fearful.
Yep.
I mean, I talked about I like treasuries, but you know, I put it in a kind of permanent portfolio structure. Like if I had $1 million portfolio, I'd have like 200 grand in NASDAQ, right? I wouldn't have $1 million. I have 200 grand, right? That'd be my equity thing. Things going up seems crazy, but you know, like we live in a world, crazy things happen. I'd have in my $1 million portfolio, I'd have $70,000 invested in those call options on the TLT. If I come into real assets, I'd have 200 grand in Bitcoin. That, given it's $1 million portfolio, I'd be buying Bitcoin at a 30% discount via Grayscale. And then you come into the final quarter. I've spent 200 on NASDAQ, 200 on Bitcoin, 70 grand. I've got $500,000 in cash. And as you know, I could just buy NASDAQ futures and I could buy Bitcoin futures, right? So I'd really have $1 million of cash thereabouts, you know, and I'd be earning 5% on cash. Or I might earn 7%. I might have some in muni bond ETFs, money market funds. I'm kind of cool, you know. And then if I get price confirmation in my favorite asset class, which is the bonds, just think of how much I can buy. All right. And so I'm sitting there, I'm making money. I'm not making as much if it's 100% long NASDAQ. You know, it's not my business. So tranquility, but flexibility, you know, and curiosity every day is a day of wonder. I'm alive, you know, stay alive.
I love it. That's
great.
Yeah, I'm of the same mind for sure. I love the intellectual curiosity, the outside the boundaries, push the edge, maybe a little bit question. It's all good stuff. You mentioned Bitcoin, Q. Do you just have any like I guess general overarching thoughts on Bitcoin or cryptocurrency in general?
My coin is Bitcoin, not crypto. I think I mean, Bitcoin's not been around for long enough. It's, you know, like it's a grain of sand versus the longevity of the gold market. But I think it's long enough to have established itself as an ongoing asset class. And that seems to be confirmed kind of by the US government belatedly coming in and wiping out crypto, and regulating it, and allowing, you know, these gigantic institutions, you know, BlackRock and Fidelity and stuff, they can smell the money.
Yeah.
And it's like, okay, we can launch an ETF, and then we'll have thousands of people phoning up, that people going, you got to buy Bitcoin, you got to put it in our ETF, right? And so I know I mean, that's everyone knows that, but Bitcoin, in terms of the market value, so we theoretically there's a limit of 21 million coins, and then people say, oh, whatever, 21 million coins. You take today's present market value of those 21 million coins, and you're talking about something like $500 billion in market worth. Okay, and I kind of said to you, I do this global macro compass, 4 quadrants: equities, fixed income, real assets, cash. Real assets, that's $100 trillion allocation. You know, in terms of, you could have it in oil, you could have it in private equity, you could have it in gold. You know, gold today is a $13 trillion asset class. So gold is 26 times the size of Bitcoin. And I know there's a lot of gold enthusiasts, and they're like, gold's going to triple, gold's going to go to $6,000. I'm like, maybe, you know, I mean, I smoke a lot of marijuana, you know, maybe, right? But if gold's at 6,000, it's going to be like valued at like 30-40% greater than all US stocks. I don't think so, right? Now, if Bitcoin triples, okay, you'd be trading at 100,000, and it'd have a $1.5 trillion market cap, which would be kind of smaller than Meta or Facebook, you know. So it has the potential, it has the convexity that we all, you know, we want to make a lot of money, because I imagine a lot of the folk watching this are kind of young kids, and they're like, you know, don't tell me to buy the S&P and I'm going to make like 4 or 5%, and you're going to charge me fees. I'm poor. I'm in a hurry to catch up. You know? So yeah, that's the formulation behind Bitcoin. Excellent.
All right. Now, Hugh, appreciate your time, man. This is my favorite part. We got some like miscellaneous questions here, not on market related. So I'll start with this, because you mentioned you're back out now dating the ladies. I'm just curious, what's it like? I mean, I'm not sure how long you were married for, but what's it like going back onto the dating market maybe after a while not?
It's impossible. Yeah, I married my first date. I was just too preoccupied. I came up for air, met a lovely lady. I'm like, fantastic, and then back inside into looking at the future. You know, 35 years, bloody hell. And I'm learning a lot of vivid sexual expressions. I now know things that none of my friends at my age know. I mean, like tromboning, things like that, you know. Do you want a rusty trombone? I'm like, you know, like, send me a WhatsApp, you know. I mean, you know,
this is why the people tune in. Yeah. This is why the people tune in.
This is it. We've got, I'm going to add a new one too. I think, you know, we've got the Hunter S. Thompson of finance with us, which is great.
Thank you. Yeah. No, I mean, asset capitalism is gonzo finance, you know.
Gonzo, exactly.
I spend all my time on Twitter quoting Jim Morrison. And like, what have we done to our fair sister? We've ravaged and we've plundered her. I'm talking about, you know, the policy mistakes, consistent, profound policy mistakes, which are creating a large disenfranchised population, and I'm trying to speak to them. I'm like, I've got to take acid just to deal with just how bleak. I've got to live in a bubble fantasy island called St. Barts, because out there in the real world is gruesome. It's really, really bad. But there's some hot ladies, so I do have to follow to meet them. But then my problem is, it's really hard. It's like, you know, like, you get the pretty ladies, but I kind of need the pretty mind, and that's like,
that is tough. That is tough.
But I hang out in some really, really funky places. So, and you know, I need creative people. So I'm pursuing it, and you know, St. Barts is not the place, because you know, people come here and they have an amazing time. And I'm like, I'm going to return to real life. So I don't live in real life. I'm never going to find anyone that I can only find people in real life. So
yeah, yeah. That's tough, man. No, I'm with you there, Hugh. Looks are great, but it's that, you need that creative mind. You need the stimulation as well. I'm with you there, man.
plus I need them to be just a little, I mean, more than a little, but kind of batshit crazy. I do love just, I've had a few adventures where I've just sat there going and just watching this girl like explode, get angry, and then talking to another girl, and she's like, "Kiss me, it'll drive her crazy. She'll love you." I'm like, "Really? I don't know," and blah blah blah. And I'm saying too much now.
No, it's all right. I don't know if many girls. Actually, there are girls that listen to the show, so we'll move on here. Hugh,
Hold on a second. Give me a call me.
Call Hugh.
He's single. Call him, ladies. Call him.
If you're in St. Barts. So I imagine there's probably, you got people vacationing from all over the world, huh? You're meeting a variety of people.
Predominantly North America. Predominantly.
Okay.
But this time of year, actually, we get a lot of South American. And actually, the great joy is in August, the island. It's a French Caribbean island.
Mm-hmm.
But in August, we pivot, and about 60-70% of the tourists are actually from France.
Okay.
And
nice.
it's just that French vibe. And
nice.
I talk about the ladies, but I mean, I need a French lover. And so it has a really amazing vibe in August. Hot as hell, but hot French ladies and gents and stuff. And it's funny seeing like being on a beach at Christmas time. It is North America, and the guys are, what do you call that expression? Buff? Is it buff? Like they're all on steroids. They've all got big muscles. They're all walking around. And then in the summer and drinking and not exercising. And then in August, it's these like lithe, lithe, svelte gentlemen like wearing budgie chokers and windsurfing. Like they've looked after that. It's a different perception aesthetically of what manhood should look like.
Okay, interesting. What are the locals like? Are there I'm just not familiar with the island at all.
Yeah, no, the locals are there's about a permanent community of 10, 11,000, which I'm part of. And this is like a ski village, and the kids come in, they get paid a lot of money, but their accommodation's impossibly expensive. Like, does that sound familiar? Obviously hard. They get a bit of savings and then they go on. Like a lot of the kids gone on now, they're working in Saint-Tropez. After Saint-Tropez, they'll be working in the French ski resorts, and then they'll come back in here. So that's the kind of rotation they do.
Okay, excellent. Okay, I guess maybe more on a deeper front here, Hugh. Are there any life philosophies that you say you subscribe to?
Oh yeah, I'm somewhat. I mean, related to what we're discussing, but it with the divorce and the longevity of the previous relationship. And normally I'm loose and fluid, but the big takeaway was like, gee, why didn't I work that out? It's the impermanence of life. Nothing lasts forever, and that's even in a day when you're trading, nothing lasts forever, kind of thing.
True.
And that rescued me. That's very kind of Buddhist in the meditation and stuff, but just recognizing, and you see this. There are some astonishing YouTube videos and whatever where you have terminally ill cancer patients, and they're glowing. It's like, I'm checking out. Unfortunately, it's going to be a bit early, but we're all checking out. I'm checking out not as a slave. You're all slaves. You're all believing these impossible things. Someone is wired. I was poorly wired, and then I had trauma, and it gave me a brain hack. Now I see how astonishing life is. So thank God I've not yet had any terminal health scare, but I had a profound trauma of a life experience, and that's the wisdom. There's always something that comes from. There's always a yin and a yang.
Yeah, absolutely. I love that, man. The like you said, like it's like it is Buddhist, right? Like the impermanence of life, and like, you know, there's so many like stuff. I swear, like the difference between life and trading, it's like there's no difference. It's the same principles when you really break it down, which, you know, that's what I love about it. I guess for you, Hugh, you know, everyone has like different ideas of like quote unquote what success is. What's success for you?
Oh, success is just not giving a damn. You know, I was on Twitter and I was saying, you know, I'm a billionaire. But I then did go on to say it's just that I calibrate my billions with a different metric. I don't really use dollar bills. I measure it in my ability to just not give a damn. You know, I can say anything. I just I've got nothing to be embarrassed about. I'll tell you anything. I mean, try it, man. Don't try me. But and that's a profound wealth. So it's a profound asset that I have.
That is, that's awesome. Yeah, I appreciate, that's why we had you on here, man. I appreciate this out, you know, this sort of thinking. JJ, I think that wraps it up for me. You got any last questions here for Hugh?
Well, I have no questions. Just thank you so much for being with us. It's really wonderful to have someone. Um, you know, I saw the quote on one of your videos. You know, I've seen things you people wouldn't believe. You know, that last line from Blade Runner. And you know, I've been through some insane things too. So it's really nice to see other people who've been there make it back out to the other side. And you know, a lot of people in this business, you know, they want to be successful and things like that, but it's it's always valuable to have people around who've been to the dark side and come back and made it, and you know, have an attitude the way you do. And thank you so much for being with us. It's been an honor to have you on the show. Really, really happy to have you on the show.
Well, I mean, thank you. I mean, if I may, if I could just give a little promo for the asset capitalism, you know,
Yeah.
I have a show once a week. I've got a Patreon service which I love, where it is a kind of mentoring thing. And you know, periodically I spend 40 minutes on a Zoom call with people, and you know, I'm in bedrooms. I'm in the real world, and discussing things. It's very Walt Disney. I mean, some of the people that I meet is like, you know, I'm a Formula One race driver equivalent, if you will, and like, you know, we get to talk car mechanics, you know. So, so we do that, and I'm on Twitter, Hendry_Hugh. I'm on the gram, you know, Hugh Hendry official, and the Asset Capitalist is the name of the podcast show. So, the more that we have, the merrier that we all are.
Yes, and yeah, it's excellent content coming from Hugh. JJ, Steve's going to kill me. I forgot to give a shout out to our sponsor here of the podcast, Apex Trader and Top Step Funding. Any listener of the podcast that has the skills to pass an evaluation can become a prop trader, fully funded by either Apex Trader or Top Step Funding. Our own Micro E Futures trading community has many members who are now fully funded. No need to trade with your own money. Keep 90% of the profits. To learn more, you can visit our website at microefutures.com. Yep, Hugh, I was going to ask you to you know, tell the listeners where to find you. You already did that. Guys, go on there, follow Hugh. Man, just absorb everything you said, man. Hugh, is this absolute pleasure having you on, man. Thanks for bestowing your thought processes, giving us a little, you know, depth into your mind, sharing some wisdoms. Appreciate you, man. Thanks so much.
Thank you.
Oh, my pleasure.
All right, so for Hugh Hendry, I'm Paulie Walnuts. He's the gorilla of House Street. You stop so.